Good morning, traders and investors. Thank you for tuning in today, Thursday, June 26, 2025. Got a good show for you here, lined up as new highs are in, folks. We're new highs in S&P 500 futures, SPY just off of new all-time highs. We're going to talk about why this market just cannot be stopped. We're going to talk about some of the price action yesterday, what was going on in a little shuffling around. Momo names chilling out, but leaders like Nvidia breaking out. Market breadth was pretty horrible yesterday. We had something like 75% down, I think, in some of the small cap names. Other macro talk here this morning, an overnight story, the WSJ reporting that Trump is considering naming a new Fed chair early. We have odds of a July Fed rate cut now creeping higher, about 25%. We'll get into that a little bit. Of course, earnings out of Micron last night. Stock moved right up to that expected move, and then a whole lot of leaking after that. We're going to get earnings out of Nike here tonight. Econ today, we're going to get GDP, jobless claims, and durable goods orders at 8:30 a.m. We'll be breaking in with that. CYN, one of our big movers here this morning, collabing with NVIDIA for autonomous vehicles. We got a handful of ratings to go over a little bit later, and our guest at 8:35 a.m. Eastern Time, Greg Weldon of Weldon Financial. Folks, let's get into it here today on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, good morning, sir.
Good morning, guys. Welcome to Thursday morning. It's the 26th. Let's do a quick rundown here of what's going on in some markets this morning. I'll start with the international markets. Nikkei was up 1.6% last night. Hang Seng down about 0.6 of a percentage point. European markets are essentially right around flat for the day. I see a little bit of strength in the DAX, up about 0.5%. Let's get over to commodities. You got some interesting moves in commodities this morning. Not in crude. Crude is essentially flat this morning, or up a little bit, I'd say. But again, pretty interesting that has given back all of those gains from the beginning of the conflict with Iran and Israel. Nat gas this morning, you could see I see it up 4.5%, but locked in a range. Here's where you get to some interesting moves this morning. Look at the move in copper this morning, is up 2.6%. That's nice. That's a very nice. See if that holds. Interesting move in copper this morning. Also, I don't know if I could get this in here, but platinum and palladium making big moves this morning, which I am long palladium, full disclosure. Palladium futures up 3%. And let's see if I could get platinum in here as well. Look at platinum go. Holy cow. Platinum's up another 4% this morning. That has been the star. Covered that couple of weeks ago about how that was starting to break out. That has really gone up pretty decently. Let's get over to gold. Gold this morning is quiet and essentially flat this morning. Silver futures will also hit those. Silver futures outperforming a bit, up about 0.75%. Finally, in the commodity space or crypto space, we'll get to Bitcoin. Not a big move this morning. I think it's down a little bit, down 0.33% this morning. So quiet. Still hasn't broken out, by the way. Still kind of locked in a range. Lastly, let's get to those important equity futures. S&P futures up 0.33%. NASDAQ futures are outperforming, up another 0.5%, powered by some of the semis this morning. Russell futures, which trailed yesterday, also up green this morning, up about 0.4 of a percentage point. Good morning, guys. Dennis, how you doing this morning?
Oh, tired. It's one of those days. I don't know why. Maybe it's hot, maybe what it is, but I'm like, I had trouble waking up. I'm laying in bed trying to get up. It's one of those days, man. Just can't get it together. You ever get those mornings where you're just like, I don't know, I just can't get it going?
Yeah. Happens to the best of us, Triple D.
Coffee.
Absolutely. How's the weather up there, by the way? Are you getting that heat wave up there too?
Yeah, big time.
What's the highs?
87, 90. Like, we don't usually get 90 up here, Georgian Bay. Like, I'm 2 hours north of Toronto. And you're on the water, and usually like high 70s, low 80s would be as hot as we would get. But we're hitting 91, 88 yesterday, and this is like really seasonally hot for up here. So like I don't know the last time. I think it's been a couple of years since we've hit 91. I feel like at least in this specific area here, like Toronto hit those, but we get cooler when we get up near the bay. But holy man, it's been hot, 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 and the market has been hot, hot, hot. The S&Ps continue their climb. S&P futures did indeed hit all-time highs. The cash has not, so obviously the rollover helps that, but the cash has not. So we're close, though. We're up another 220 on SPY. We're 4 points away from it on SPY. I mean, we've been calling for this all-time highs in June. We've got 2 days left here, so we're running out of time. Actually, I guess 3 days with today. So we have time. I think we're going to hit new all-time highs in June. So hard to derail. Christian, you were watching the breath yesterday, and it was terrible, yet the market refuses to go down. Let's talk about that.
Yeah, I mean, you had a couple different things going on. One of which was like right at the beginning of the day. We had a lot of the momentum names were really hot pre-market yesterday, but once the market opened, a lot of those names kind of gave back a lot of those gains, had reversals, and the breadth was particularly poor. I look at up volume versus down volume in the New York Stock Exchange, and it just kind of got worse over the trading session. I typically, when I see that, I kind of don't press and trade as much as I usually do. But I think as we were getting towards the end of the day, the down volume in the New York Stock Exchange was down about 70%. But
Christian just froze.
then
Christian froze up. Brentster's coming back in with the save
Christian,
here.
I'm okay.
You better?
I think
Okay, cool.
just a little glitch there.
Okay,
I think that was very different in terms of what you saw with Nvidia. If you looked at that stock breaking out, you must have been like, wow, this market is really strong. But
yeah,
I don't know if you noticed that too, in terms of what the small caps were doing.
Yeah, there was so many stocks trading the red. We were talking about in the STN room, and I'm like, 3/4 of the stuff is red, like just across the board. Like a lot of sectors weak, even some stocks within tech were weak. Yet, like Tesla had a horrible day. But I'm like, I kept saying it's Nvidia and AMD that are just doing the heavy lifting here. I mean, Nvidia was doing huge heavy lifting, holding up the entire market. That continues this morning because Nvidia. Micron might have been the earnings, and we get to that in a second, but Nvidia is going to be the story of the day here again, as it once again hits new all-time highs. The march is on. The AI is back. I mean, all forgotten from the fall in April when this thing went under $90. Now $156.90 here. The party continues here. The AI story is not going to go away. It is the future, and this is one of the leaders in AI. So hard to bet against Nvidia when you just see, the stock, obviously in the pole position for AI, but, bouncing back and strong. And here they go. So you got AMD and Nvidia, both the two chip leaders leading the way here, Christian. How are you playing these?
Well, I mean, this was really interesting for a while. This Nvidia was kind of stuck right at resistance. 143, 144 was the level that I was talking about, and now you got a breakout. And Nvidia had their general annual shareholders meeting yesterday, but it was very quiet. Like I didn't really hear too much from that in terms of headlines. I forget what the broker was yesterday that put a street high price target. They really kind of came out with a timely note yesterday. And the stock was super strong, and it's rallying again this morning. Micron earnings, even though they're kind of different businesses, that's fueling this rally as well. And yeah, I mean, this is blue skies.
I think so.
For a long time, you have not, the Nvidia's been trading in a range, and so I say long time because it feels like to these days, 6 months is a long time. But I mean, it did a complete U-turn where it was trying to break out, going back to the beginning of the year, and it failed, and it spent, basically 6 months in like purgatory, came all the way down, touched support, and now you're doing something really good. You're breaking out to new highs. So very impressive, and I'm seeing a lot of call activity too in this name too. We saw that Friday as well. We saw a pretty decent position in calls, and they got it right, and stock's breaking out.
Yeah, Micron earnings $1.91 versus $1.60, which was a huge beat. 9.3 billion versus 8.87 billion, which was a nice beat as well. They raised the guidance for Q4 substantially, 235 to 265 versus estimates of only 201. We talked about the bar being impossibly high here for Micron. The stock has went from $60 to 127 in 2 months. It's the biggest move I've ever seen Micron make in 2 months. It usually doesn't move like that. And it's just been straight up. So we talked about the huge high bar. The stock reported earnings, and it was a great response to it. Went right up to 137. It kisses the expected move because the expected move was $10, and then started leaking and leaking and leaking, and actually went all the way down and ended up going red. So that's telling you how hard this bar was, because this earnings report was awesome. But didn't matter. Stock was, it gave it back just because the bar was so high. It is trading higher here. It's like a reluctant higher, I feel like. It's hard to bet against this, though, because this was really good numbers. The simple fact was it went down. Like, it gave back the gains last night only because the bar was too high.
Yeah, I think that's exactly it. I mean, the numbers, I agree 100%. The numbers were really good in this. And, I've been also looking at, and I think we've mentioned this before, but, if you look at a couple of the other names in this space too, outside of outside of Micron, if you look at Western Digital, these names have not been getting the attention that they probably should. Western Digital has also basically been straight up and a very methodical gainer. Seagate Technology, STX, has actually been the best one out of the three. I just bring these three names up because I kind of just group these
Sure. They
together.
stay together.
Yeah, and look at the move in STX.
I know.
This broke out going all the way back to the end of May. This hit 52-week highs, and it's been straight up since then too. So very impressive, this group.
Replay of COVID 2020, where we started in March and we had the terrible March where the S&P fell 25% in March. Yeah, it did. March 2020. And it was April this time where we had like the 10% fall in 3 days. We were down 19% from the highs, and we V-bottomed all of that. We got past the COVID crisis, obviously, and that was it. I mean, this tariffs is setting up the same way. Same stuff has happened here, where you've got just these crazy moves off the April lows, where tech has just been absolutely relentless. And we did talk about this back in April. We're like, if we're buying anything, you should be buying tech, because the AI story is not going away, and they're giving you a chance to get in the valuations. And like I was saying back in April, I'm like, AI works. These tech stocks work in a tariff environment, and they work in a non-tariff environment. I'm certain stocks got to stay away from, like Apple, because obviously those are not tariff proof. But I think you can clearly see that there's separation happening here, and we know July is coming. And the reason Apple cannot catch a bid is because the uncertainty around tariffs affects Apple more than any other stock in the Magnificent Eight. Here's Apple. It's red again, not participating again. And we can say, oh yeah, it's lack of growth. We can say a lot of fundamental things about that. But there's also a tariff deadline coming in 2 weeks, July 9th. And we don't know where it's going to land for Apple. And I mean, you're paying Foxconn employees $2.40 an hour to build iPhones. If they're going to put tariffs on all those things, there's a possibility that iPhone cost could end up going up substantially. And people don't have to upgrade every cycle. They don't have to upgrade every other cycle. They can start holding on to those iPhones a little bit longer. And if they hold on to them a little bit longer, that's really bad news for Apple, because we know Apple is an iPhone company. The innovation for everything else has just not been there. So I think you can clearly see winners and losers here. Like they're saying, NVIDIA wins no matter what. It doesn't care about tariffs. And certain things, everything cares about tariffs to a certain extent. But Apple cares about tariffs a hell of a lot more than NVIDIA does. So maybe you got to start drawing a list here as the July deadline approaches. Those AI stocks that are flying right now are the ones that are more insulated against potential tariffs.
Good question for you too. I mean, we started this conversation talking a little bit about the small caps, and about from a very technical standpoint, they can't seem to get through the 200-day moving average, and they've been underperforming here a bit. But I don't know if there was a fundamental reason for why they were so weak yesterday. IWM, let me just give you the numbers for the small caps. I think they were down. They ended up, even with that late day move yesterday, they still finished down 1.2%. So what is your opinion of small caps? Do you think that they're a buy here, or do you think they're
No.
just kind of like in a
It's the
void?
same thing. I
Yeah.
think we've got to start as the tariff deadline starts approaching. And I'm not saying the market's going to roll over because of it, but there's going to be winners and losers. So tariffs are coming. Don't kid yourself. We have some already in place, but we've got this July 9th where he kicked it 90 days down the road for a lot of countries here. That's coming. Small caps are going to be not insulated against that. So I think you got to be like talking about companies that are insulated and companies that are not insulated. The tech companies are probably the best positioned here. Small caps are not. And the small caps don't have a sexy story here either, Christian. I mean, we can keep calling for the Tom Lee, small cap breakout where they were going to go up 50% last year and then go up anything. Or we can sit and just analyze and say, hey, small caps have not been the place to be for a decade. And why are they going to continue to be the place to be? Half of these companies don't make money. They'll be users of AI, but I don't know how many of these companies are actually going to make money from AI. Maybe in cost cutting, it might help. AI is going to help to cut costs, obviously, at the expense of jobs, I will say. But I mean, there's so many other sexy stories. There's just nothing sexy about the IWM, and that's why it continues to lag, continues to underperform. In the last month, when we're seeing the Qs break out, S&P's marching higher here, stocks like Nvidia and AMD absolutely ripping. The IWM has went up nothing. We were at 210 on IWM on May 12th. It's June 26th. So in the last 6 weeks, the IWM is up 1%. That same time period, the Qs are up ballparking about 8 to 9%. Stocks like Nvidia are up like 20%. Stocks like AMD are up like 30%. So I think it's just clear. I think the story remains the same. There's going to be winners and losers. Just like yesterday, market doesn't go down, but lots of losers, lots of carnage, lots of, not good stories out there. And then you've got, certain stories that just are relentlessly higher. And this AI story continues to be hot.
So one thing that could possibly move IWM, starting to see, we had Powell testify in front of Congress for 2 days. So he finished that yesterday. And it's kind of interesting to see that that the Fed fund futures moved a little bit, pricing in a little bit of a higher probability that they might cut interest rates towards the end of the next Fed meeting is July 30th, so right at the end of July. Going back to where that was last week, it was like around an 8% or 10% chance of a cut. So not pricing in much of a cut there at all. To all of a sudden, we've jumped to about a 25% chance. What's your thought on this? Are you thinking that we get the first cut of this year in July, or you think we're just getting, maybe it's a little bit more certain that we get one in September?
I mean, some Fed officials were coming out there. You get, obviously the Trump, saying we're going to name her a new chair, trying to put pressure on Powell here. He's doing everything he can in his power to try to get the Fed to lower rates. I don't think Powell has any intentions of lowering rates in July. I think there's a lot of Fed that wants to wait and see, like, what actually gets said here on tariff day. Do they kick the can down the road another 90 days? Does the taco trade work here again? Or does he actually come in and put serious tariffs on some countries? I mean, that's all to be determined here. So it's with so many unknowns. I mean, at this point in time, I just think 25% is too high. I think it's almost a 0% chance, in my own opinion, that they lower in July. Can they lower in September? Yeah, if the economy starts to roll over, show signs of weakening, or, like inflation doesn't start creeping back in here, there's a possibility we could go in September. I don't think there's any chance we go in July. So that 25% chance, I'd short that all day long.
Yeah, and that's a great point. I mean, and it is what it is. It's still less than 50%. It's 25%. And that number will jump around, which brings up, we're going to get, a bunch of economics that come out here in 10 minutes. I'll give you a quick preview.
What do we got? What do we got at 8:30?
We've got, you're going to get the GDP number, you're going to get the retail inventories, you're going to get core PCE, durable good orders. So,
all right, we got a lot of numbers. Go wide.
Then, of course, you get the weekly initial jobless claims number, which probably to me is the most interesting thing to see if that jumps. They're still expecting 243. And a reminder that I was going to mention tomorrow, because this number is always at the end of the month, we're going to get the PCE number. So that will give you another sense of what's going on with inflation. They're only looking for 0.1. So reminder today, you'll get this other core PCE, but it's really the number tomorrow for the PCE, which is the Fed's preferred gauge of inflation. So more inflation data coming out, and maybe that changes around the Fed tool a little bit in terms of Fed fund futures.
We got individual stock moves every day. We get some small $3, $4, $5 stock going up 150, 200, sometimes 400%. Today's taste of the day for all the algos is CYN, and it's because they announce a collaboration with NVIDIA. That's the magical word. If you're a small little piece of, like, I won't say it, but if you're a small little company that's trying to find its way, mentioning NVIDIA in a press release is a surefire way to set the algos off. So we have CYN highlights next generation robotics, automation, and AI technologies at Automatica in collaboration with NVIDIA. Sounds promotional, but the algos buy promotional. So they've come out, obviously, a lot of these things are just like that. They've, not necessarily done a deal, but they're just got, like they just bought some NVIDIA processor sometimes. I don't know if that's the case here. I haven't read deep enough into it. But collaboration with NVIDIA helps reinforce our mission to build cutting-edge autonomous vehicles. So they got lots of sexiness in here. Autonomous vehicles, talking with NVIDIA. They had all the buzzwords here in this press release here, Christian. So CYN exploded and the algos go wild.
Yeah, I mean, and I'm a little bit disappointed in myself because I've been talking a lot about these little autonomous driving companies. AEVA, I'll bring that chart up in just a second, but I just wanted to talk about this. But it's very odd to see like NVIDIA collaborate here, because what do they do? Autonomous industrial vehicles. I don't know where that comes into play for NVIDIA, but I mean, this has been such a hot space recently that we've been talking about like taking positions in a couple of these things. I mean, these things have quietly been some of the best performers. Here's the AEVA technologies, and we talked about this pre-market prep. We've talked about it in Christian Circle segment 2 over the last like month or so. This name has been strong. I'm trying to remember what the other one is, which I just traded and just got out of it too, which is where is this from? I should have if anybody remembers the name of this one. I'm drawing a blank. I do this from time to time.
I do this all the time.
OUST, right, is the other one.
Right,
so that's the other one that's been on fire. So CYN is right in the wheelhouse of this stuff. It's been a cheaper stock, but I mean, I think that this one may have some runway to it, given the strength in some of the other names. Now, this has gone up from what, $4 to 11, but I wouldn't be surprised if this, continues to kind of outperform a bit. And it's not just a one-shot deal.
These small companies, it's hard to say. What's interesting is they're saying as highlighted on the blog post from June 24th. So if you look, and I just clicked this blog post link from June 24th, which was literally 2 days ago, and they've got, it's on NVIDIA blog post. And I'm just looking, robotics leaders tap NVIDIA simulation technology to develop and deploy humanoids and more. Robotics developers and solutions providers across the globe are integrating NVIDIA's 3 computers to train, simulate, and deploy robots. Neuro Robotics is a company that's mentioned, Delta Electronics, Wendelbots, and Syngin. Mentioned right here 2 days ago, but, so if you're digging a little bit, maybe it's possible. So obviously this is a press release. And Brent, can we bring Brent in here? Because this looks totally promotional to me. Like, this is like, they're using NVIDIA technology. It's not like NVIDIA and them signed this huge deal and NVIDIA's, it's more like, no, we're using NVIDIA to do this. So they are on the blog post, but this sounds ridiculously promotional to me.
And the way that they, in the press release, the way that they angle it, like they say, like, as featured in NVIDIA's recent blog post. I know you just highlighted that, Dennis, but I'm almost like under the impression that Syngin didn't even know that NVIDIA was going to highlight them on the blog post. And they were like, oh, sweet, let's do a press release.
Yeah.
I'm speculating a little bit here, but that's kind of the tone of it. Yeah.
And they know, like, if you press release and you put NVIDIA in there, like, sometimes, you know what we should do? Like, this is the way this market is now, is we should have pre-market prep But you should go buy like some type of NVIDIA, just even one product from NVIDIA, and say pre-market prep collaborates with NVIDIA because we bought, some $200 chip from them or whatever. And then the pre-market prep stock that was listed would just explode. That's where we're at here now,
a good
folks.
idea.
That's where we're at. Any mention of NVIDIA, and it's just gone. So this was out there 2 days ago. So I don't know, maybe we got to dig further. Like start looking at, what's on these blog posts for NVIDIA, because if some company comes out with a press release afterwards, the stocks are going to explode. It's not like they're the only company mentioned here. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 companies mentioned in just like ding, 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 ding. They're one of them. They've highlighted this. So again, the algos explode. You get something, small companies, who knows where the party ends here. But this seems like just very promotional to me.
It does. Would like to hear a little bit more about that story, obviously, than just on a blog post. I was just going to mention, just regarding the overall.
That's all there is, Christian. There's only a blog post. There's nothing more to the story. Right. They got mentioned in a blog post, and then they highlighted it in a press release to make their stock go a hell of a lot higher. It's like, this is what they do. This is what the companies are all doing here now. But you can't, the algos are programmed. This is the short-termism of the market, which we were talking about, just a couple days ago. Is this market is all algorithmic driven. It's 100% on the headlines, 99%, nothing's 100%. 99% algorithmic driven. And the companies know it. They know the algos are programmed in to see any PR with NVIDIA. So this company did nothing wrong. Nothing wrong at all. They're just highlighting it. But they probably knew that by highlighting this, the stock's going to go up. You know what else is interesting here too? Is how much this stock was up yesterday ahead of this blog post. So the stock went from $4 to $5 yesterday ahead of this post. And now it's up 135%. That's interesting too. I'll just say that.
Yeah, absolutely. But yeah, I'm just going to reiterate, like, this is a very hot space. This some of the technology with automated driving, the OUST story, going back a couple of weeks ago, was that they got a Defense Department approved LiDAR sensor. So, I mentioned that I'm not sure what the collaboration is with NVIDIA, but some of these things that were originally being used for automated driving are being used for in other places, just like this Defense Department contract with Ouster, OUST. So I find it very interesting. 1 minute here to go to economic data.
Yeah.
And before we get to the economic data, I don't think that this trend now. Of course, this one is kind of a little bit of a, they didn't get a contract or anything like that. It's a collaboration, but I think this group stays strong for a while.
This whole thing, like anything to do with autonomous drive, anything to do with NVIDIA, just stays the same. There'll be another company tomorrow that's got a collaboration with somebody, and it'll be popping off like this. We get one of these movers every day that are up 200%. And that's what the kind of market we're in. If you release this in April, it probably doesn't do a hell of a lot. Releasing this right now in the speculative bubble that we're in, perfect timing for it. So bravo to CYN for doing the perfect time to come out with a press release with NVIDIA. 8:30, so we're going to get those numbers here breaking right now. Christian will be breaking in with them.
All right. Yeah, I'll go over, we'll see which numbers come out first, but I'll definitely be hitting up the initial jobless claims. 243K is what they're looking for. Should get those in just about a second here.
Here we go. Let's be honest. Any dip they're going to buy, if there even is a dip. We're waiting for those numbers. Jobless claims, GDP, durable goods. There's nothing much happening here yet, but any dip gets bought. That's just the way this market's like hungry for stocks.
There you go. 236 is the number for initial jobless claims. So that number comes in a little bit lighter. So that should be maybe get a little bit of reaction there. 236 versus 243. Also, the GDP number comes in a little bit less, but we know that's a very lagging indicator. But there you go. Well, what else do we get here with this number? Did we get the
durable goods?
Durable goods came
initial
in
jobless claims. Did you give initial jobless claims?
I did.
Yeah.
236 versus 245.
Durable goods were up 16.4%. Is that number right? I got 16.4 versus 8.5. Is that right?
Yeah.
It's got to be something to that.
Maybe some seasonality or something going on there.
Yeah, something's weird.
That's a decent number.
Yeah, it's a good number. They are. It's calling 16.4 versus 8.5. That's a huge beat. Market seems to be a nothing burger on this. GDP was minus 0.5% versus minus 0.2% expected, so slightly light there. It must be seasonality or something on the durable goods number that we've missed, but because that's a big beat. S&P is just kind of hanging out. Again, there's just underneath demand everywhere here, though, so it's hard to be bearish right now. So
there we go. Sometimes it does take a little bit of a minute when you have a whole bunch of data like that for the market to kind of respond a little bit. There you go. You got the market selling off a little bit. I think that's because the data came in a little bit stronger. Bonds are also selling off here a little bit, just down slightly. By the way, we have a 7-year bond auction today as well at 1 o'clock. Just a heads up on that.
Okay, we got Mr. Elconin sitting in the background here.
What's going on, gentlemen? What's going on with
same
the
story?
Higher and higher and higher we go here. Yep.
Yeah, it's not going to stop. It just doesn't stop. We're hitting all-time highs. That's where we're at. Bottom line is we're getting all-time highs. Where we stop after that, who knows? But it's just coming. They've went too far to not get all-time highs now.
Okay. All right. Well, we got a guest in the background here, Greg Weldon from Weldon Online, and you talk about versatility in the markets and not in the markets. That's Greg Weldon. Let's bring him on right now. Good morning, Greg.
What's going on, guys?
Weldon Online joining us here on Pre-Market Prep. Let's get to the important stuff first, Greg. How is your preparation for the World Series of Poker coming up?
Well, it's funny you should ask because I should be there right now, but I chose to stay back in case all hell popped off in the Middle East. Fiduciary responsibility to my clients precedes and supersedes going to Vegas to play poker. So big disappointment too. So I was set up to hang out with Shaq this coming Saturday. So I'll have to rewind for next. I'll have to rewind for next year. Yeah.
Oh, okay. All right. Yeah, I know you talked about that. So a little bit. So you're keeping the eye on the markets here, and you keep an eye on them from a very, very broad perspective here with your global macro strategy report here. Let's just talk about the macro factors going on in the market right now. And, the market doesn't seem to care, Greg.
The biggest macro factor out there is really prominent right now, and you're starting to see the tentacles of that impact in a variety of different markets, including stocks. Right? Dennis said it earlier. You can't be short this market. You can't really see yourself selling it. Why is that? What is the macro impact? That's the biggest dominant theme right now is a lower dollar. I mean, it really is. You're talking about, you come out of this situation in the Middle East where you're thinking, the Strait gets closed, oil's at $140, inflation jacks back up, the Fed's going to have to be on hold, through the end of next year. Now you're pricing in 3% rate by the end of next year. You're talking about a hot July meeting. Not only that, but the dollar was already breaking down. You already have this kind of push out of dollars. Tariffs didn't help that. I mean, this is what you want to do. You come out here and, we needed some kind of bullying, to solve a trade issue. But the degree to which we maybe bring Canada and Mexico in first and then go after China, because what you did is you pushed all these, these countries further away from the dollar. And while stuff like the BRICS unit's not being talked about much anymore, they are still in a sense of urgency even more now to move away from the dollar. You see a lot of little signs of that in terms of the currency markets. But there's a bigger secular breakdown of the dollar that now has a backdrop of a monetary story to it. And the biggest, most tightly positively correlated intermarket analysis out there is a lower dollar equals higher stocks, higher dollar equals lower stocks. This is a bullish phase for stocks right now. New highs probably coming, but you're also seeing it in a variety of commodity markets too, and we could certainly talk about that as well.
Okay, let's go to some of the commodities markets here, and let's just talk about the oil market and the wild fluctuations in that. had the pop and the drop here. Talk about some of the fundamentals and some of the technicals you're looking at in the crude oil market.
Yeah, for oil, I think the most important thing to look at is the base effect and where you just were in oil prices, particularly gasoline, where you're pushing, 232, and then you go out along the strip, prices are a little higher throughout the summer. You were starting to push into a period where you were going to get a positive base effect from gasoline prices on inflation data. And this move down just totally took that right out of the narrative. I think that's a powerful backdrop to this monetary story, because what it does is it removes some of that uncertainty for the Fed in terms of inflation relative to the actual underlying inflation rate right now, which is pretty low in PCE. They could move without really still even getting to neutral on policy. So that's what's kind of interesting there. And then when you tie it back around to, that dynamic plays out on the dollar, which then plays out on other commodities such as copper. Right, we did a piece yesterday. We did an alert to our clients yesterday to get long copper. It was last I saw it was up 15 cents this morning. Right, there's actually some fundamental stories to some of these commodities, particularly in the food sector, where weather has created shortages. You've seen cocoa, you've seen OJ, you've seen coffee at record highs. But right now, the focus is kind of on copper, some of the more industrial metals. Platinum broke out. We called that one 2 weeks ago. Palladium would be the next to follow there. Silver is making new highs. I mean, it's going to close on a monthly basis at like a 14-year high here this month. So the commodities are kind of back in play. And I think the one that really looks interesting from a supply-demand perspective, where you see that inventories now are basically a third lower from where they were a year ago. And, prices, you saw a big rise in price at one point, above $5 a pound, above $10,000 a ton, and got met with supply. There were sellers, and it knocked it right back down. Then you lop off a third of inventories globally, and a lot of that got shipped to COMEX. So COMEX is up, and everyone else is down. Shanghai is very low. London is very low. And all of a sudden, the swaps are in a backwardated state, meaning the nearby is creating a price premium that's trying to bring metal to market. Copper is really interesting. Platinum is in a third year of a supply deficit, to where if demand, doesn't slow, some of these metals, copper and platinum, are almost priced as if there's recession risk had already been priced into these markets. And now if you don't get that, that's even more bullish, especially in something like platinum, where you could end the year with a significant deficit in terms of supply demand. So some of these metals, aided by the dollar, provides the catalyst, and you have some big moves taking place.
Hey, Greg, so this move in copper, is this more of a, you were just kind of going over a little bit, but is it more of a demand supply issue? I know that we've heard for some of the AI components and that you need copper, or is this kind of, usually when I see copper going up, it usually means economies are doing pretty decently. There's also a correlation with copper and with emerging markets. Is it more of this, supply demand issue, or are you thinking that, that this is showing very strong for emerging markets and economies globally?
Yeah, you covered it right there, because it's all of that. And what's interesting is that we just did the piece yesterday, which we happen to send to any of your people, on the copper, silver, tin, by the way, platinum and palladium. And if you kind of look at the situation with copper, yes, the demand side going forward is huge, and everyone kind of knows that. That's why you don't see copper, really staying below $4 a pound anymore, almost ever. So you have a floor now in copper. I think you could take that floor higher, because you now have a shorter term supply dynamic where you literally, a year ago, supplies were 50% higher than they are now. Inventories on, in Shanghai, in London, and in the US. A lot of that was ahead of tariffs. They shipped a lot of copper, a lot of silver, a lot of gold bullion to the US. People wanted to hold that locally. But it's a bigger picture dynamic where global inventories of copper are breaking down. And tin, always, I've traded these markets for 4 decades. I mean, tin is the perennial leader in the base metal sector. It's on the verge of a breakout too. And then you look at what happened in like platinum and palladium. Yeah, so I think it is, yes, the long-term demand side for some of the metals, particularly copper, because even if you look at some of the capture of energy sources, solar energy and whatnot, you have going on, and then you still don't have the ability to transmute that into electricity. So all of that, especially when you look at China, that also plays, by the way, into another, piece we caught last year, and then we got out, and then we've re-entered just recently, caught it pretty well, is uranium. So in that, from that perspective, you got like 69 new reactors being built. You have some of the smaller, safer technologies now being approved. It's a market that is not in short supply now, but longer term, you want to talk long term like copper. With uranium, you get out to 2028, 2029, you're starting to roll it over into a supply deficit situation when demand will keep chugging along. So there's a lot of plays that kind of fit in on a variety of these planes of the fundamentals that we're talking about.
All right, I got two more questions for you because this is great information. So copper, would you stick with playing that in the metal, or would you actually kind of look at an FCX or a Southern Copper to play this theme as well?
Yeah, that's a good question. I mean, I like to play it every way. So this way you don't have to choose. I mean, that's a tough call. Right now, the miners are underperforming. The COPX is the one to watch for the copper. Southern Copper has a nice little shelf where it could be breaking out. I think I forget the price level, but also FCX to me looks really interesting because you've had all these issues, Freeport, Micron, you've had all these issues that drove the stock down. It was out of favor. It came roaring back, and now it's kind of made this huge range. It has a pretty good longer-term technical pattern, although it's very wide, which gives it a look of volatility. But you kind of get above some of the most recent highs there, and a stock like that looks really good. I personally play the commodities. It's the most pure way to play it, and I think you can really leverage it out when you get the right risk reward set up. As a money manager, to me, that's the better way to play it than trying to figure out some of the things, some of the nuances, the CEO, the debt issues. I mean, there's so much going on there beyond just the macro. I watch the ratios, and right now the COPX is underperforming. So in a place like uranium, on the other hand, Quebeco has outperformed forever. So that's the one you want to own instead of some uranium, because right now uranium's price isn't skyrocketing. It's the benefit that will accrue, and it continues to accrue these companies.
Okay, this is great stuff. I just wanted to ask you a question. You touched upon palladium, and I was looking at both these, and both platinum and palladium, which have been, platinum has been unreal, and congrats if you got long this movement. Platinum, this could like make your year. So congrats on that.
Exactly. That's why you got to catch all these moves.
What do you think about palladium?
Yeah, it should follow. And what's interesting to me is, even here, platinum at $1,350, up like $300, is probably still value. And what's interesting to me is in the piece I did yesterday, which included platinum, do you have a breakout of a 25-year downtrend line in platinum against silver? That's really interesting to me. When you see something like that, it just that really just perks my interest in terms of platinum. As for palladium, it's lagged because it's not having the same kind of supply-demand deficit situation that platinum has. Platinum has a great fundamental, which was undervalued and undernoticed until just recently. So from that perspective, though, they trade together. Right now, there's a lot less risk there. Platinum's pretty risky now in terms of the moves you have to have and where your stop would be to get out of the position. So I like palladium. We bought it yesterday. If it gets to 11.15 on the front month contract, then you're going to see it go through 1,300, possibly as high as 1,550. We have actually really promoted over the last month, starting when we first got into this trade, was the South African mining shares and then Sibanye-Stillwater. All right, so the equities played very well here, particularly in Impala Platinum in Rand, and then Sibanye-Silver. I mean, if you look at the chart of that one, anytime that stock is, and it's it's a little convoluted, but anytime that stock's been below $5, it's been value. All right, we said at $4.50, this was great value, and I wrote in a piece yesterday, even at $7, it's still great value, relative to what it could be and what these underlying metals could be. Not only that, but you talk about this whole sector, all right, where a lot of these companies, you can't dismiss kind of the ladder where the juniors and some of the smaller companies that are out of favor and they're lower prices become more valuable just because of the metal in the ground is more valuable to companies that can actually come in here and cost effectively mine the products, where oftentimes the owners of these mines, the metals on the ground, can't do that as effectively. So it makes some of this particular sector huge in terms of M&A. All right, and you guys were talking about Mag 7 and chips and the whole 9 yards. You see the XLK wants to give you some leadership here, so that's kind of interesting. But I also wonder, and I hear this all the time because I get this question all the time: are people starting to ask their their AP, their global wealth advisor, their financial advisor. Why don't we own any gold? And so that's kind of an interesting. It's like, you're in the Mag 7, or now people want to know if they own Mag Silver. So I think that's an interesting thought process going forward, where you'll see, because of the dollar's decline, because of issues facing the bond market out here in terms of supply, public debt owned by the public, it's kind of insane. So you're going to have to deal with those issues. That'll be Fed QE, more dollar printing, more dollar depreciation. So these kinds of things are longer term thoughts to have in the back of your head. And when you start to see some of the mining shares act really well, it's like, hey, this could be the start of some rotation of Wall Street money into this sector, which would be a lot, because you're not used to seeing that kind of capital flow.
Couple other, these are really interesting subjects, and thank you for elaborating on this. What about the rare earths groups? Like, this has also been a very hot group. MP Materials, and then more recently TMC. These stocks have been on fire. I actually just bought the dip yesterday in MP Materials. You like the little pullback here, or does it need to come in a little more for you?
When you're looking at that, it's like, I don't really worry too much about trying to, price myself in. It's like market. All right, I want to own it or I don't. So in this case, you definitely want to own these. And it's what's interesting about this course is kind of a misnomer. It's probably most of your people, you have an educated crowd, so they're going to understand. I mean, these are rare in the sense that we don't have a lot of them mined. It's not that they're rare, that they're not in the planet. So I think that's kind of interesting. Trump has actually allocated money to the Army to start drilling for stuff like this here in the U.S. It just takes time. In the meantime, that's the bulk of our trade deficit with China. So from a macro perspective, it's paramount that these companies succeed in terms of, getting new sources for this kind of stuff, let alone that we know we have to use it for the AI build out and all this other generational type of electronic build out. But at the same time, you're talking about materials like dysprosium that have properties that even transcend kind of here when you're talking about space travel. Some of these things are really important to that. Nanometals, you're talking rare elements. So it covers a wide range of stuff. And it's a really interesting, area that I find fascinating and always learning more, because, it's not something that's been around long enough for too many people that have been doing it for 30 years.
All right, Greg, a lot of great information here. But this all kind of begs the question. You talk about commodity prices and, the impact on inflation. You have an administration that immediately is calling for lower rates. You have a Fed that is standing pat on the inflation outlook. You have these commodity prices rising. You have the dollar falling. Where you at with the Fed? Where are you at with interest rates? I mean, it's always a key driver of the market. We can't exactly factor in what the tariffs are going to be or not be. But are we looking at a potentially inflationary scenario coming up?
Yeah, it's a great question. And what's interesting about that is, a year ago, I started talking stagflation, and now that's a more popular word. And if you really think about it, I think that's where this all goes. You could talk about, I'm bullish on stocks here. We bought stock indexes along with copper and stuff, and they're highly correlated, by the way, the two of them. And copper's lagging. It's another reason I like copper. But when you talk about, this kind of thing where it's like, look, the consumer's still struggling. The economy is, healthy, but like kind of clinging to health. When you talk about, you haven't had these highs in delinquency rates on credit cards since 2009. You have the most credit card debt, borrowed at the highest amount of money. You have disposable personal income is now below personal consumption expenditures every month. You have now a savings that is below credit card debt. I mean, these kinds of upside down black holes of debt, especially when you talk about the U.S. Treasury, completely upside down. This is a big deal going forward. So when you start to talk about this and the Fed, I feel that the Fed will be forced to acquiesce at some point in time to higher inflation, to protect the bond market, to protect the consumer, to protect the economy, because you can't service the debt without the growth, all right? But you can't get the growth without creating more debt. And this is the cycle we're in now, which means one thing, the certainty is, dollar depreciation, which will drive inflation higher. The Fed will acquiesce to that to try and, bail out the consumer, make sure the bond market doesn't get out of control. You're talking about a bond market too, by the way, which goes great now. But, that's the short end coming down. the curve steepening is making new highs in the curve. And when you watch something like the 30-year, 10-year, it's at 55 basis points. That's a pretty high level for that tranche of the curve. And you start to realize that the long end, where you have a lot of debt that is maturing in the next year, you have another over $1 trillion in public borrowing to do in the last 4 months of the fiscal year. These are big numbers where you have to attract buyers, and buyers are leaving. So, and the Fed is still QTing. So this is problematic for the next, like, you could love the stock market here because of the lower dollar, and that will always drive the stock market higher. But in terms of thinking this is a reflection of a stronger economy that's going to be good going forward, that's not the case. That's going to force the Fed's hand, which will then continue this cycle where the 40-year downtrend in interest rates and inflation is over. It's a new secular uptrend, and we're going to go higher in inflation, and the Fed will cause that themselves because you're going to have to protect the consumer. You're going to have to protect the bond market at some point in the next 12 to 18 months.
Okay. All right. The good with the bad and the bad with the good. Greg Weldon
It's always
online.
good to have with the bad. Yes, for sure.
A well-rounded view of the market. Excellent commentary. Intern in the chat said, "Hey, you got to get Greg Weldon back on. Excellent job. We'll be looking to have you on again soon. Thanks, Greg."
Yeah, my pleasure. You guys do a great job, so I'm always happy to contribute.
Okay.
Thanks, Greg.
Yep.
All right. Before we go to ratings,
Some
Triple D, what do you have
news
for
here.
me?
Yeah, I was working in the background here. And again, this may have been a little bit earlier here, but you're seeing a big pop here this morning in solar stocks. I think Meta has something to do with this as well. Meta and Invenergy, which is a solar company, signed a deal to give me the exact headline here so I don't butcher it. Signed a deal to source more solar and wind power for their data centers. So it gets you thinking, like I've been saying, solar is an AI play. Well, this is a headline that makes you start thinking about solar and AI. I mean, we've been nuclear. And I know solar is not, and Trump's not a fan. That's a big headwind here for obviously all the solar companies here. But we're seeing a huge pop here this morning in solar stocks. Solar Edge up substantially, SEDG. We've got First Solar, which is probably best of breed, up another 2% here this morning too. ENPH up 4%, getting most of the losses back from last week when obviously we had the headline coming where Trump and obviously the bill not being friendly to solar. I think solar is energy. Solar is going to be a source of energy that we're going to use for a very long time. It's expensive, but it looks like Meta's looking into it. So Meta looking into solar makes you think AI companies starting to look into solar. Maybe it gets the kickstarts that a little bit. What are your thoughts on the solar stocks here, Christian?
Yeah, I got trapped in with that with the news with Solar Edge. I was looking at Solar Edge. What's the name of this company? Invergy? Is this?
Yeah,
is
it's
this,
private.
it's private. Son of a.
Yeah,
But,
Invenergy.
but this is a great catch. I mean, I would think too. We've heard so many of these companies collaborate. We've heard about like nuclear, like they're getting involved with nuclear energy. Why are they not getting involved in solar? So that was one of my reasons, plus the technicals with Solar Edge, and I just caught it with really bad timing. So
yeah,
I like where you're going with this, and it's kind of definitely an under the radar play, and that's why also like I talk from time to time about whether I position in calls or in stock. If you're worried about the headlines with something like this, where because there's also the politicalness of this, and if you don't want that risk, clearly what I just dealt with was Solar Edge a week ago. You can buy calls, in this way you can basically say, hey, I'm going to do X amount of investment in this, and the worst thing that could happen is I lose the premium. And the upshot is, of course, if a company like Meta or a couple other companies come out and say that they're joining in to get solar energy, because it seems like this this AI and energy issue is a definite problem, and they're going to need to get more sources of energy, whether it's nuclear and maybe it is solar here. So that's the first. And again, it's great news that you brought in here, because maybe it's the start. I mean, this is the first one that we've heard with collaboration with a big company. So
Yeah, I was just going to add on top of that, Christian, that so get the ball rolling, right? You've had, some negative catalysts took the market down, and then now you have some of these bigger companies look into it. They got a ways to go to get back. I was just looking at the charts and First Solar.
Ugly.
Yeah, I mean a lot of people will be looking for a gap fill there. But a long ways to go. Just to give you the best example here, First Solar. I mean, this was it had just 2 previous days had hit 180, almost kissed 180. So if you're looking for a gap fill here in this, you got about another 14 points. That's for First Solar. 169.63. So Dennis, thank you for that news. We could go to some ratings here, and I'd just like to start out with the trade desk because we had Joel Elconin on last week, and he was talking about the technicals and the fundamentals of this stock. How it's just trying to recover, just hanging out, consolidating, not catching a bid in this market. Well, Wells Fargo agrees down grades trade desk to equal weight, lowers price target to 68. TTD in the red.
I mean, stock coming down here a little bit, dipping. I don't know. I'm going to throw this one to Christian. This one's in the middle of nowhere for me. You see anything on this one, Christian? This one's tougher for me, TTD.
Besides seeing the downgrade, I don't know. I haven't.
There ain't nothing
Christian
to like about this one, I don't think.
Yeah,
I think me and Christian both taking a pass on this one.
It's in the middle of nowhere. It's a gap fill. It hasn't really participated in the market. This was SEC or investigation news, wasn't it? Or earnings or something. This was this was bad news, and at the bad news on that the high of the day was made. So you haven't even come close to filling the gap. So coming in on the 50-day moving average, but no excitement here over TTD.
Well, and the other
Cisco,
one too.
Nutanix. What do you have, Christian?
I was just going to cover too because there's been a lot more attention with AppLovin doing different type of advertising than Trade Desk is, but this stock has not been acting well either. Since they had that announcement or non-announcement that they did not get into the S&P, the stock has not been acting well at all. So this group to me looks a little bit more challenged, and I don't think there's any reason to press or try to get involved in this group quite yet.
Well, and you can see how much Robinhood just shrugged it off and came back. So it can tell you, the strength. So Robinhood and App were both expected to be out of the S&P. Neither got added. And they hammered both of them that day. Well, Robinhood, they bought right back. AppLovin, they did not. They continued to sell it off. So you can see the difference between a stock that is loved and a stock that's not loved as much. I mean, you got the S&P very close to all-time highs. If you're coming in and buying stocks that are down 50, 60% from the highs, there's reasons they're down, significantly from the highs here. So a lot easier, and this one's not down 50%, but it's down 30%. So you want to be looking, probably for stocks that are approaching new all-time highs, or leaders like NVIDIA that are breaking out to new all-time highs when the market's breaking out to new all-time highs. If you're going down and looking for, stocks to play the catch-up trade, I mean, lots of people keep trying to play for the catch-up trade, including myself. And it just seems like these stocks never catch
up. Cisco, I believe, had a rating exchange, right?
Yeah. With KeyBank starting new buys, new overweights for Cisco, Nutanix, and ANET, so Arista Networks. So 3 of them last night. Cisco trading up slightly, Nutanix trading up slightly, ANET trading up slightly. I mean, Cisco's been marching. Maybe we should just finish with this one, Christian, because, it's been a long time. I'd say all-time highs, but I believe when you go back to the year 2000, I think Cisco hit $80. So we still are not back to where we were 25 years ago when Cisco was going to rule the world. 25 years later, it's not the case, but it's coming back. Maybe that $80 within reach.
Any day now.
Any day now. 25 years of pain for Cisco shareholders.
I'm still holding from 2000, and I'm not selling. I'm just trying to get back to break even.
Never sell
okay,
at a loss. Who sells at losses?
it's a funny joke, but I have to say, like, it's been one of the strongest. It is a cyber stock, and it's been one of the strongest names out there. So, recently, not going back the last 25 years, but recently, 1 year, it's done very well. And the whole cyberspace has been strong, but this is one that's at 50. I have to say this right. Not all-time highs, 52-week highs. 52-week highs. I wanted to cover one other name too because I'm long it. NRG had got a outperform rating. Let me pull up the note here so I can give you the proper information. But
sure.
Initiated with an overweight at Barclays. What I like about this is the price target 197. Going back into the wheelhouse of like, how are you going to facilitate all these AI? You're going to need power. NRG has been consolidating. I kind of jumped on this a little bit too early yesterday, right after the open, and then it kind of gave back a little bit. But maybe the price target raise gets the stock going a little bit. It's not been moving. If just going to go back to the daily chart here for a second, it's been consolidating a bit, and of course, it's already made a big move. But you're starting to see some of the other names, the other names in the group, begin to kind of move higher here again. GEV did come out of the consolidation. Quietly, VST has been making a nice move as well, and that's been moving higher. So I'm looking for strength out of NRG today.
901. Okay. That's going to be the show.
901.
So the show continues over in the STN room at Stock Trader Network. So join us over there. Christian, we want to thank you again, obviously, coming in, giving us great information here. We want to thank Greg Weldon, who is a wealth of information here for us as well. We'll be back at you tomorrow. Who's the guest tomorrow, Joel?
Tommy Lackey.
We love Tommy.
Yep. He'll come with his charts, his fundamentals, and his technicals. Looking forward to that. So, everyone, have a great day. That's a wrap here for PreMarket.